Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and I'm doing this very early. It's 4:10 p.m. on Thursday, September 22nd, 2022. I have a charity event tonight that I have to go to, so got to be dressed up. My wife said you got to polish yourself and get yourself ready. It'll take me hours. Kidding, of course, but I won't be around when I normally do these. So let's talk about what's going on this week. We are now seeing a slew of central bankers join the U.S. Today, the Bank of England joined. They raised their rate 50 basis points. We saw the Norge Bank. We saw the SNB. We saw yesterday the Sweden's bank, the Riksbank, make their move in the market. Taiwan moved today to raise rates. Vietnam moved to raise rates. Japan kept their policy unchanged. And we saw today that... who else was there? There was one more. Turkey. Turkey decided to lower rates. They only have 80% inflation. It's strange what they do in Turkey. Do you know that their stock market's up 77% for the year? You know why? People buy stocks because the pricing power's in the companies with 80% inflation, and it keeps them with the economy. That's what they're doing. It's their way of hedging and trying to beat it. I just read that today. I was flabbergasted when I read it, but it makes so much sense. So where are we in these markets? It's pretty simple. The markets have now gone from the path where they all thought the Fed would yell uncle to most people saying they get it. The Fed's message is clear. They're going to take and beat inflation if they can get their arm around it. Those people aren't disappearing that don't believe it. They'll just wait for a better opportunity if the economy weakens to come out and say, now the Fed's going to move quicker than you thought, and they don't have to go as high as you thought. That'll be their story. We're not there yet. Everything comes in, if you will, segments. This segment is the one where people have become believers that inflation has to be thrown back into the bottle, and the Fed's very capable of doing it, and they're going to cause pain along the way. I watched today on CNBC as I'm watching these people that are constantly buying this break. And they go, well, how you doing? Well, I've held it for years. Or I just bought it. Yeah, I'm underwater, but I'll buy more. To what point? But that's what investors do. Investors should have a time horizon of 3 years, 5 years. Traders have a very short time horizon. I don't know what you are because you're not in front of me and we're not talking to each other. I'm talking to you, you're not talking back. But most of you that watch programs like this, what you're really looking for are trade ideas. And as a trader, you're bearish. How could you not be bearish? You have to be. As a trader, you have to have areas that you see on a chart where you're able to get a reaction back to the upside from, and we're approaching that. In fact, we're in it in a number of the stock indices. Is the June low going to hold? I don't know that it matters if it does or doesn't, to be honest. You've already broken the market down so much that the idea was going to keep going up. Those people that held on are under severe water. I think you'd agree with that. I am looking to get my clientele back in the markets. I step out when I see a big meeting coming up. I didn't think that this meeting that the Fed did was as important as the CPI, and I said that, and I still don't. They did exactly what I expected them to do. To me, there was no surprise. The surprise, if there is one, is that the bulls are finally realizing they're on the wrong side of the market. So when we come to the S&P 500, we're down for the week, 2.5%. Tomorrow's Friday. Don't know where you'll be. I'm not looking for a big drop tomorrow. The markets come down very hard from the CPI day. This is why I said this was the big day. Yeah, you had another break yesterday, but as you can see, it's nowhere near the size. This is what did the market in. It was just, you were going to set the Fed on this crazy path, and other banks, they got to beat the inflation, and that was the number that did it. So you're in a downtrend until you take out 39.36 and a quarter. The swing line, which is this brown line, there are 5 rules that I created as to how the line goes to the current bar. And it's always the bar right before it. I don't care if you're on a 5-minute chart, a 15-minute chart, a 1 day, a weekly chart, yearly. The rules are identical. and you're looking at higher highs, lower lows, inside days, outside days up, outside days down. It's pretty darn simple. And then it draws that line. And I use that line because it's the basis of what a trend is. If you're trending down, you're going to have lower highs and lower lows. Otherwise, you got what's called a vertical move. And that can happen when you just get a straight move, and instead of getting pauses along the way, you just go into a collapse. Well, they're hard to trade. This is way easier to trade. In addition, we had a bearish crossover. Now, if you're a student of moving averages, remember, a moving average doesn't predict the future. It's what happened with past data, and people have to understand that. You had a bearish crossover, which meant that the shorter term moving average got under the longer term, and the market's under both. That's a bearish signal. And as the market comes down, you often will make a run for the most recent low. Well, when that happened back over here, the low was these lows. You've taken that out. I still, and I said it when we were there, I know a lot of people, chartists, were saying, well, the 3,900 level's important. And I kept saying, I don't think it's important. I don't see how you can make an argument that that's an important support zone. I think you can come back here and say it was, but I don't think you can go from the other one. But everybody's got their own way of charting, and I'm certainly not there to argue if you thought it was. Do I think we'll go back to those June lows? I do. I said it when we were coming up here, catching a lot of heat from people, and I also pointed out to you what? Let's go back in time so you learn. I said the first challenge of a 200-day moving average, that's a one-year average if you think about it. That's often a big number. If you go down to the 200, down to it, it's a big support number. Pay attention to those. And that happens to be where the market peaked out, and I felt pretty good on my call there. And the market has come down, and along the way I've done okay. So now the question is, what's going on? We're on the Bollinger Band. You either can ride it, which means you glue yourself to it. Just imagine going to Home Depot and you buy that Gorilla Glue and you put it on there and it's just going to lay on it every day. Hasn't begun doing that. And it's often accompanied when you embed. What is embedding? The slow stochastic reading, the momentum index, typically trades between 80 and 20. 80, 20. I use it a lot different. I look at a set of readings between 70 and 30 because I want to get an area on the way up. Anything over 70 is overbought, anything under 30 is oversold. And as I look at it and I see what it does, there has to be something in it that says if the market starts going underneath 20 or staying over 80, where it goes, example, locks in and stays like that, over and over when that occurs, I see a market fall. And then when the momentum is lost, the market often returns to the 18-day average. The market was bullish, you lost the embedded reading, you went back to the 18-day average. You got bearish here. This was the 3,900 level. You lost the red line, crossed over 20 and stayed there. You went to the 18-day average. Well, now you're getting bearish again. Now, when you're bearish, I don't know how deep you'll fall, but you stay on the bear side till the reading is lost. And when it's lost, it tells me, voila, we're probably going to get a move to the 18-day average of closes. Need proof of it? Take a look at the Japanese yen. Look when it lost its embedded reading. Now, you're going to tell me also that your readings on your slow stochastics are different than mine. And you're right. As if you're one of my paid subscribers to my morning videos and my full research, I will send you, no problem, how to modify your reading so it exactly meets mine. If you're not with me, no, I'm not going to do it. It's that simple. I find that mine's better than yours. It's that I worked on it many years ago with George Lane, the man that developed this, showed him what I had. He was alive at that point. He'd been on my TV show. I used to have a show, Stocks, Options, and Futures, for many, many years on the old, what was it called? Financial News Network, I think it was called. That became CNBC, by the way. And I'd have all these Everybody. I mean, I'm older, so it was the Granvilles, the Prechters. I can go on and on. The Marty Zwags. I had so many people on my show over the years, and because we covered everything, and I pry on them. What's your indicator? What are you doing? How's it work? And then I'd modify it and give them a call. Hey, I've done something. Will you take a look? And we talk, and they go, hey, twists and turns. I don't know anyone that develops one that says, hey, if you can get a better mousetrap out of it, go with it. In any case, you're embedded, right or wrong? Let's count. Both numbers under 20, under 20, under 20. You're there. So as long as you do that, on rallies, there's a way to sell short. If the red line closes over 20, I'm going to look for the 18-day average. It's that simple. The way to sell short is in my course, the Enhanced Bollinger Band course. You're not just selling the bounce. There's a way you have to do it. When we come over to the Dow, are we embedded here? Well, I think you can see it. Day one of embedding. Come on. Stop there. I know what's going on. That got touched. I won't do it. Whatever happened, something just got touched the wrong way. It won't matter. You're embedded, and it's the same philosophy. Do you ever sell under a Bollinger Band? No. No. There's no condition. I don't care if it just wants to drop. Why do I argue it? Because it doesn't. Go back. Do your work. Can it? Sure. The world can end too. But in normal environments, no. You'll get under it, and then you're quickly getting, within a short period of time, back above it. If you stay over it, it only takes a little while to do it. And when they latch on and do it, I bring to you and I show you how to make a count, it's called, of how many days in a row and what the percentage is that the market will stay underneath that band again. But the longer it stays on it, the more bearish the situation, or the more bullish the situation, the longer it stays on it. This is not a sign of weakness, it's a sign of strength, but it will back away and you're trying to come in on that strength. Those are the important things to remember. So VIX, it refuses to get up and run. Okay, that tells me that people aren't buying this insurance. There's many theories. I read about them every day, and I don't know that I buy into any of them. People just haven't thrown in the towel. The institutions, I was listening today, have gotten out of the market in a big way. John Q. Public is holding on, and he's made up his mind to ride this out. Win, lose, or draw, that's what he's doing. He calls it an investment, and that's how you say, my portfolio's down, but it's an investment. Okay. You could have modified your portfolio, but they won't do that. In the 30-year bond, you are still bearish as can be. This is the power of an embedded stochastic. And this is how, if you're going to do it, you get those bounces like I talk about to play. Same thing in the 10-year note. Look at how it's underneath the lower band. You get these readings. I see my own clients. They become cowboys. They're going to buy. They're going to catch the bounce. Sell the rally. By the way, on this market, do you notice we haven't had a higher day? Not one in a very long time. It began back here. It's got to be 2 weeks. Every day is made a lower and low and not a higher high. Dollar index. I don't want to own it over the Bollinger Band. I know you do, because in your mind it's going up to 116, 118. If it does, there's other ways to catch it, I hope, or parts of it. If not, you tell me I got to own it over the Bollinger Band, sucker move in my opinion. You don't do that. You tell me that when you bought it over there, you couldn't have come in at better prices if you were so determined to be a buyer. You can't catch every bus that leaves the terminal or every flight that leaves the airport. You understand that. As a trader, you're looking for the setups that make you comfortable, not what makes the market comfortable. And if I'm not comfortable, I just tell my traders I don't like what I'm seeing. It's the same thing in the euro. Now, you know Miss Lagarde, when she comes out now with her decision on what the European Central Bank's going to do, she's cornered. She has to go 50, maybe 75 basis points. She can't go a quarter. She'll look as though she doesn't have control of the situation. She's cornered. Now, is that good or bad? Well, the market is concerned. The trend is down. You're oversold under the band. I'll let somebody else want to keep that. In the British pound, same thing. We're getting now the programs from Liz Truss as to how she's going to work with the income tax and other programs she's rolling out. It's a nightmare. I doubt she can come out of this in one piece. She inherited a terrible situation. It has nothing to do with her capabilities. I don't know her capabilities, so I'm not defending her. I'm defending what she walked into. And when you walk into a pot full of you-know-what, how do you get out of it in this economy? So she's going to do whatever she does, and there'll be criticism galore. I guarantee it. In the meantime, coming down, the bank was in a rock and a hard place. 5 members voted for, as I understand it, a 50 basis point hike. 3 members wanted to go 75 and 125. I believe there's 9 voting members on the committee. In any case, hard rallies in the market because you're embedded. I'm looking for short sale opportunity. Bitcoin. Today it was up, which surprised me given the stock market was still down. So give this market a little bit of an applaud. What did it do? Oh, it held the Bollinger Band. Remember what we talked about. It eventually has to break out. The narrower the bands get, it's like a spring inside of a pipe. You wind it, you'll get a move. You narrowed it up over here, you wind it, you get a move. But you get these big wide bands now, you don't have to get moves out of those. That's altogether different. So this market's building energy for an inertia play. Which way? I'm still thinking down. In Brent versus WTI, well, the differential keeps moving out to the upside. Again, the market is very concerned with this 300,000 conscript call-up to put soldiers that know nothing in many cases on the front lines against seasoned Ukrainian fighters now. That's not going to work. They got to retrain these people, get them up there. The sheer numbers are very impressive, no question about it. But they need doctors that they can get going in different areas. But do you think this is selling well at home? Wasn't this supposed to be a blitzkrieg? Even though Russia uses the term they hate the Nazis, I'll use the term. Wasn't it supposed to be a blitzkrieg? At one point, it looked as though the whole country was going to fail, right? Do you remember how they were bombing Kiev and what was going on there? Whole game shifted, but it's going to be full of shifts, back and forth. And of course, President Putin keeps taking his finger and saying he will use the nuclear option. Anthony Blinken today was at the UN criticizing that as can be. I have no idea what would happen if a small nuclear tactical weapon was used within Ukraine. I don't want to know. I don't want it to happen is what I'm really saying. What would that do? Do we give Ukraine small tactical nuclear weapons? And where would they hit? Inside their own country? I doubt it. I don't know. It's getting dangerous. It's getting worse than dangerous for the world, not just those 2 countries. Key resistance up at the 200-day 18, but if you close over that, that's probably the liftoff in the market. Right now it keeps testing it, not able to get through it. WTI, same thing. You keep coming back to the 18, not the 200-day. The 18 and you get thrown back, but you're oversold. So the market is bearish as it looks on the chart. When you're oversold, it's a filter. Maybe you don't want to own it at that point. Then we get to the natural gas, and we saw today about 10% more gas build than the market was looking for. And that took this market immediately down. It was down 4% earlier. It ended up down 8% if you take a look at where it's at. But I got a secret for everybody. The name of the secret is called, I think it's HERMINE. Do you know what that is? That's the next named potential storm. And guess where this baby is by the American model and the European model of hurricanes destined to go. It's early. Gulf of Mexico. If it goes into the Gulf of Mexico, it changes the game. We haven't had one in I don't know how long, and they'll shut the rigs down. They have a lot of things that they'd have to do. So caution is my word. That's how I'd be viewing it. So as we take a look at everything through here, the one thing that I want to remind you is the research that I bring you. In the research that I bring you, in the mornings, I do a morning futures video. I start recording typically 5:30 a.m. Central Time, covering 40 charts. But before we get to the charts, what I try to do with you is I will sit there and tell you what the morning fundamentals are in Asia, Europe, the reports coming out in America, any big news events that you have to deal with when the market's coming up, the expectations on reports that aren't out at this point. Then we're going to look at daily charts, sometimes weekly charts, at least 40 of them. And they'll be trading as we're talking in most cases. And we're coming up with a game plan. At least I am. This is what I think you should do, why you should do it. You will hear me talk most of the time, don't do anything. Because you shouldn't do anything all the time. But when I see a trade, win, lose, or draw, I'm going to say buy here, sell there, go market, go price, whatever it is. Full game plan, what it is, and we'll keep track of them as the trade's unfolding day in and day out and see what it does. I match it up on Saturdays with the weekly futures video. And that is where we're looking at the bigger picture. So you're not looking at the day-to-day action, the weekly. What does that do? The two are very important. I use them together. It's very inexpensive to give this a try. How much are you spending on your Starbucks coffee with your tip? That's about where you're at. So if you'd like to see this, you're going to get 24 of them. They average 16 to 20 minutes long. There's a scroll bar on the bottom so that you can just move right through, and then it'll tell you, I'm in the stock indices, I'm in the currency section, I'm in the energies. Go right where you want to go, save time, see all the charts like that. All you need to do is follow my hand right above me, hit the cursor. You see that icon? Just click it. And when you do, it'll take you right where you have to go on our website. We're also at www.iraepstein.com under the name research. I'm Ira. You have a good day.